Hello friends, welcome to Navin's Commerce and Management Academy. Here I am going to explain you about the accounting terminologies, means various types of terms which are used under the accounting. Capital. Capital is the total investment made by the particular person in the business. For example, if you want to start up a business, whatever the amount you will invest in the business, that will be called as the capital. And if you want to calculate what is your capital, then you can calculate the capital as total assets minus total liabilities. That is the difference between the assets and liabilities. You will get the capital. Accounts payable. Accounts payable includes all the expenses that a business has incurred but not paid. Means here the company or a business has to pay the amount to some other persons. The requirements or resources has been taken by the business, but the amount has been not yet paid. Such type of things are called as accounts payable. And accounts receivables means here the amount should be received by the company, means it includes all the revenues that a company has to provide but has not yet collected payment on, means goods given on credit. Whatever the products you have manufactured, the products has been handed over to customers but the amount has not received by the company. They are called as the accounts receivables. Assets. Assets are those things which are having the value, and these are owned by a particular person or a particular company regarded as a having value, and these assets will go for meeting the commitments of a particular business. For example, the machinery will be considered as an asset. If you purchase the machinery, you can perform your production activities through machinery. So like that, assets are those which will be having certain value, and they are owned by a particular company or a particular person, and they will go for meeting the commitments of your business. Assets can be two types: current assets and fixed assets. Current assets are those assets which will vary according to the situations, and fixed assets it will remain constant for the in all the situations. Expenses. The amount which you are paying for certain persons for a service rendered by the person, or the amount which you have paid for the resources consumed. So like that, whatever the amount you are spending either for its service or for the resources purchasing, will call it as a expenses. Example, you can give it as a salaries paid to the employees. Employees are working for us, they are providing the service, so we are paying the salaries. And rent paid to the particular land or building which is used for your office. All such type of amounts will be called as the expenses. Liabilities. Liabilities are the amount of cash or other affirmed to be paid in the future to certain persons. Means here the company has to pay the amount to certain persons. Either it may be for institutions or it may be for a particular persons. For example, you have taken a bank loan. The amount should be repaid in the future time period. That will be considered as a liability. Or you have taken some amount with a particular person who is called as a creditor to the company, so you have to repay the amount in the future. So certain types of things are called as liabilities. And again, liabilities are also two types: short term liabilities and long term liabilities. Revenue. The income which is derived from the business activities, means whatever the business activity you are performing, by performing those activities, whatever the amount or income you are generating, that will be called as a revenue. Book value. The book value literally means it is the total value of the business according to the accounts maintained in the organization, which are reflected from the financial statements. If you want to say theoretically, the book value is the total amount of a company which gets from the assets are sold and liabilities are paid back. Means here book value can be said as literally as well as theoretically. Literally it means the value of the business according to the accounting books, and theoretically it is the total worth or total amount of a company if the assets are sold and if the liabilities are paid. Whatever the amount remaining, that will be called as a book value. Book value is the amount that the company's creditors and investors can expect receive if the company is liquidated. Fixed assets. Fixed assets are those assets which can be used for longer time period for the business use, and fixed assets cannot be converted easily into cash, or within a 1 year, one financial year we cannot go for converting the fixed assets into cash. The examples we can give it as the manufacturing equipments, real estates and furniture, and are called as plant. All these are the fixed assets which will be used for a longer time period, and these are called as the tangible assets which are used for the business purpose. Current assets. Current assets are those assets which can be converted into cash very easily within a 1 year of time period. In the previous we have said fixed assets which cannot be converted easily into cash, but whereas current assets we can easily convert into cash within a time period of 1 year. Examples we can give it as a cash, inventory and prepaid expenses. Business transaction. Any dealings of business which involves trading. Trading means buying and selling of goods or services in exchange of some value, that is money. Such type of tradings will be called as a business transactions. Means buying and selling of any goods or services with the exchange of value, will call it as a business transactions. In business transactions we will be having two types of transactions: cash transaction as well as credit transaction. Cash transaction means after getting the goods and services into hands, immediately if you are paying the cash and closing the transaction, we will call it as a cash transaction. And credit transaction, we will receive the goods as of today and we will pay the cash in the future time period, that will be called as a credit transaction. Cash discount. Cash discount can be given by the seller to the buyer in return for paying a bill before the scheduled due date. Means in case of credit transactions, a customer who has to pay the amount to the seller. So if he pays the amount before the scheduled date, then a seller will go for allowing the discount for the particular buyer, that is called as cash discount. And trade discount, it will be made on the full invoice price. Means a customer who buys goods in ordinary course of trade, means you will go for purchasing regularly from the same supplier, and the total full invoice price, on the total in full invoice price, the trade discount will be allotted for the particular customers. Debt. It's nothing but customer owns money to the company. Means if a customer has to pay certain amount to the particular company, we will call it as a debt. It will arises in case of credit fails. Here debt can be three types, that is good debts, doubtful debt and bad debts. Good debt means there is a guarantee of getting the amount repaid, and doubtful debt, it may or may not be repaid by the customer. Bad debt, it will not be repaid by the customer so for the entire lifetime. And bad debts recovered, customer is said to be a bad debt if he repays the his due later in the financial years of the business, then it will be said as a bad debt recovered. Sales. Earning of revenue for the goods and services rendered, means whatever the goods and services you are rendering for your customers, from that whatever the amount you will get, that will be called as a revenue. Here sales means earning of revenue, means the trading selling of goods will be called as a sales. Cash and credit sales. Cash is received as soon as the sales are made. Means if you are handovering the goods or services to the customer, immediately if the customer pays you, then it will be called as the cash sales. And if goods are handed over to the customer and the amount will be paid in the later stages of financial year, then it will be called as a credit sales. And if the goods are returned by the customer to the business, then it will be called as the sales return. Purchases. So whenever you are going to exchange for money, means the thing which you are purchasing by paying some money will called as a purchases. Here if you are paying the cash and carry transaction, means immediately you are paying and getting the product to your hands, that will be called as a cash purchase. But if the payment is made after few days or after months, and goods are received immediately, that will be called as a credit purchases. And whatever the goods you are purchasing, if the goods are returned to the supplier, then it will be called as a purchase returns or return outwards. Debtor, a person who has to pay the amount to the particular business or particular company, he is called as the debitor. Debitor will be present in case of the credit sales of goods and services. And creditor, a person or a firm or a company where the enterprise has to pay the amount to the particular person, we will called as a creditor. Drawings. It is the amount of money or the value of goods which has been taken by the proprietor or partner for his domestic or personal use. Whenever a proprietor takes amount from the company for his personal use, it will be called as a drawings. Drawings will reduces the total investment or total capital in the company, because he is taking the amount from the company's capital. And drawings will appear only in the accounts of sole proprietorships and partnership firms. Depreciation. It is a fall in the value of an asset. Means the whenever the value of an asset is decreasing, then we will call it as a depreciation. Why the value of an asset will go for decreases? Because of its usage. When we are using assets for a time period, the value of the asset will go for continuously decreasing. And with the passage of time, means time passes on, so the value of the asset will go for depreciates. And in case of obsolescence and in case of accidents, so in both the cases the value of the asset will go for depreciate. So whenever the value of an asset falls or decreases, we will call it as a depreciation. Hope you all understood about the accounting terminologies explained in the video. Please stay tuned for my channel for more and more updates. Like, share and subscribe my channel for more and more